All right, meantime, Tesla followed up its 20% spike on Monday with a gain of 14% just yesterday. I can't even get over it. The company's market cap passing that now of Nike and hit a high of over $960. $60, right, $960, and I'm say, okay, I almost wanted to say $1 million. And the meteoric rise is reminding some of bubbles like Volkswagen and Bitcoin. Here's what longtime Tesla bull Ron Barron had to say about where he sees the stock going.
This year, Tesla is going to do somewhere around $32 billion of revenues, and I guess that they're going to do $100 billion of revenues within 4 years. And I think they have potential for $1 trillion of revenues within 10 years. So basically, you're looking at the very start of what's going to happen with Tesla. This could be one of the largest companies in the whole world.
Joining us right now is Tim Higgins. He's a tech and auto reporter for the Wall Street Journal. Also with us is our own Mike Santoli, CNBC markets commentator. Joining us on the Squawk Newsline is Jed Dorsheimer. He is the analyst at Canaccord Genuity. He just downgraded Tesla this morning to hold while maintaining a $750 price target. Jed, help us with this decision, and what are you really telling investors to do? Because it's one thing to say there's a value to the stock. It's another to say short it.
Yeah, no, and we're certainly not saying short the stock. When we came into the year, actually, I came on CNBC with, we had all indicators that were very bullish, and the stock's been much stronger than we initially anticipated. But one of those bullish signals was the China component to the story, and we think with the run in the stock that fundamentals need to catch up to the stock. And so I don't necessarily disagree with what Ron is saying, Ron Barron, that is.
Right.
But I do think that we need to be prudent, and it would be irresponsible to not acknowledge that a large component of this story, which relies on domestic demand in China, is at risk right now.
Right. Hey, Tim, one of the things we've all been trying to figure out is how much of this is retail versus how much of this is now institutional money chasing either some kind of FOMO situation or at least a momentum trade.
Yeah, absolutely. You look at the Robinhood app, there's a lot of trading there from retailers. In the recent months, we've seen some of those mutual funds get into Tesla. It's hard to tell in the last few days, though, but it does feel when you talk to analysts that this is definitely a FOMO situation and a lot of froth in the market.
I mean, I think when you have a trajectory of a stock that looks like this, it's everybody and it's everything. But one unique aspect of Tesla is super entrenched true believers on both the long and short side. So you have the Ron Barons who aren't going to sell, and their stock is not being traded every day by retail. You have, obviously, Musk with 25%, and then you have the short base that's getting forcibly taken out at this point in some of these trades.
Gone. I mean,
they're in the process of being gone, but forcibly. Well, meaning that the brokers are getting them out.
Forcibly by bankruptcy. I mean, if you're short Tesla in the last 2 weeks, you're gone.
I guarantee you we're not going down to no short interest when we get the next report.
By the way, they're offering rebates on Tesla stock. They're paying you to short the stock in a certain way right now.
Exactly. But my point is...
But hold on, Mike, because people say, we've never been here. There's never been a company like this with this kind of revenue. I found one. There actually is a company that has a market cap larger than Tesla with less sales. You know what it is? Salesforce.com.
Salesforce is it's right near it, yes.
Salesforce.com.
No, here's the thing.
I'm not knocking Salesforce. I'm saying we've been here before.
A software business.
The profit margin's crazy.
It's a totally different situation.
I'm not saying they're analogous, but people call Tesla a software company.
Nobody said it's unique. If you look at Qualcomm in 1999, it had the exact same path. And it took 17 years after it fell 80% to go higher. So than it was in 99. I'm not saying that's happening at Tesla either, but there is a retail froth. People have obviously launched into it. It's we've been talking about how it's been a lot of riding this momentum, and it's now an unstable situation, whatever the long-term value of the company is.
So, Jed, what's the answer? Are you telling people to sell it at the current price, not short it? What are you suggesting here?
No, I think if I had a core position in the name and I like this from a disruptive, if I kind of go back and hearken to, are EVs going to be disruptive to the auto sector? We believe, definitely. And so this should be a core position for people that want exposure to that. But, to not look at locking in some profits at these levels and just kind of saying, hey, we don't have great data in terms of what Chinese demand is going to be. Is it going to be delayed by a month? Is it 2 months? Is it 3 months? Is it 6 months? How is that component of the story, which is really important in terms of overall numbers, going to play out? We're just saying, let's take our foot off the pedal right now.
Jed, I was so surprised when Ron Barron yesterday, when we asked him, you got 1.6 million shares that you've owned since 2014. It's just take 2020, and it's up 80% since January 1. Take a little bit off the table. He admitted that one of his portfolio managers wanted him to. He was like, no way. It was incredible to me, his willingness to stick by it and not even just a little bit of insurance. And
well, there's a ton of house money in the stock right now, and that can play both ways.
They have a convertible bond, which is now way in the money.
Right.
So, Tim, by the way, quickly, are other electric cars selling? I don't see a lot on the road. I don't see a lot of e-trons and I-Paces and e-Paces.
Well, that's what the magic here of Tesla is. That they've created a market for electric vehicles, really, because people are buying because of the brand, not necessarily because it's an electric vehicle. And that's the frustration when you look at traditional automakers, you look at GM, they've come out with electric vehicles, and it just hasn't taken off in the same way that you've seen with Tesla.
Well, yeah, the Chevy Volt.
To Jed's point, though, there is a big picture enthusiasm for a post-petroleum world. And it's all now running through Tesla. Just like internet TV all ran through Netflix for a little while when it was $400 a share. And when somebody else comes along and you can credibly say, we are going to participate in this market.
Or Tesla, by the way, just makes a good-looking car. The Model S is a good-looking car. The Chevy Volt was like
Higgins has a piece today making that point exactly. People are buying not an EV, but a Tesla. That's what he says. Absolutely.